Good evening, members. Today, on behalf of GST and Indirect Taxation Committee of SIRC of ICA, we have a session on annual accounts and 9C. We have our speaker, Shankara Narayanan. So I welcome you all for this online session of Indirect Taxation Committee. It is very privileged to introduce Mr. Shankara Narayanan. I don't think he needs any introduction because he traveled across Tamil Nadu and South to delivering his lecture. So he's well known in the GST faculty team. Shankara Narayanan is well known GST member. I introduce. He is a chartered accountant and cost accountant. Member of GST study group of ICI, master trainer of GST affiliated by Institute of Chartered Accountants of India. So, speaker and trainer on taxation at Institute of Chartered Accountants of India, Institute of Cost Accountants of India, Institute of Company Secretaries of India, and Commercial Tax Staff Training Institute, Tamil Nadu, and Regional Training Institute of C&AG, ICT Part NIT Ayog Initiatives. The founder partner of GPVS and Associate, a CA firm present at Chennai, Bangalore, heading the indirect taxation compliance advisory and litigation vertical. I think this year 9C there are some changes in filing of returns. Definitely the indirect taxation committee, it's the things that it required to member to be updated towards that 9C annual returns. So I welcome you all once again for this wonderful session. Sir Shankara Narayanan, sir, this session is yours.
Thank you, sir. Good evening, CAAV Arun and the other members of the Institute. GST annual return. It is the flavor of the month from starting from November and going into December. We would have already had a run-in with income tax related compliances, the due dates extension. Now we are stepping into the GST realm, where the ultimate reporting of whatever that has been reported during the financial year 24-25 needs to be consolidated, and the corrections that we had carried out as part of our accounts finalization needs to be brought into books by way of reporting this annual return. So let's directly get into the discussion of annual return, starting with the points that are there with respect to annual return, which has been there and requires some clarification. Plus, we will also discuss about certain new aspects brought into this annual return, which is unique only to 24-25 annual return. Now, these are areas where we need to be careful, because our experience has taught us that whatever that annual return we had filed 3 years back, we are now being questioned. So that is when we come to know, okay, had I done it this way in that year, maybe lesser notices in the current year. A similar learning will have to be done for 24-25's annual return, so that we don't have to feel the same way 3 years from now. So with that in perspective, let's look at certain aspects which are basic in terms of annual return. Further, certain intricate aspects also, which again forms part of our learning because of the notices and other issues faced with the department. As far as the turnover limit goes, the turnover limit remains the same in terms of section 44, wherein if a person is going to have an aggregate turnover of lesser than 2 crore rupees, the requirement of annual return under section 44 has been dispensed with. It is purely optional. On the other hand, if a person's turnover is going to be more than 2 crores, but lesser than 5 crores, then there is a requirement to file GSTR 9. Whereas the reconciliation statement, which is GSTR 9C, is optional. If a person's turnover is going to be more than 5 crores, then annual return constitutes GSTR 9 and 9C. So here I would want to take a minute in terms of clarifying the point that what is annual return? What is annual return is determined by section 44 on my turnover. If my turnover is going to be aggregate annual turnover is going to be lesser than 2 crores, annual return is not even applicable for me. If it is going to be more than 2 crores but lesser than 5 crores, the word annual return denotes only GSTR 9 for me. Reconciliation statement is optional. If my turnover is going to be more than 5 crores, 9 and 9C becomes my annual return. Interestingly, this point was advocated across India, but portal was not taking this into consideration. Consequently, what we were getting to see all along was that when GSTR 9 was belatedly filed, a late fee was being collected. On the other hand, if 9C is being filed belatedly, there was no late fees, which led many of us to think, okay, there is no GST late fees on 9C, but this time and again was being highlighted. And in this January, we did see the department coming up with the clarification by way of a circular also by stating that one-time option for all those who have filed 9, supposed to file 9C, who have missed to file 9C, to come and regularize themselves before 31st of March 2025. This option was given. This reiterates the point that if my turnover, aggregate annual turnover, is going to be more than 5 crores, 9 and 9C becomes my annual return. Now that it has gained so much of momentum in this year, in the 9C also, which we tried filing day before yesterday, we could see a new late fee table has been created. So hereafter, if 9 is filed for a person for whom 9C is also applicable, and beyond 9, there is a delay in filing 9C, I think late fees will also get calculated for 9C, which is in line with the legal provision. On the other hand, if my turnover is going to be lesser than 5 crores, 9C filing is optional. If my turnover is going to be lesser than 2 crores, my both 9 and 9C are optional. Here, a word of caution, or I would say out of experience, sir, turnover is lesser than 2 crores, let's not even file 9 or 9C for this person, is not a ready-made route that every one of us can take, because there could be some turnover differences. It could even be an exempted turnover. Say, for example, an interest income or an agricultural income not reported under GST returns, yet which forms part of the P&L of that person at the end of the year. Hence, in those cases, it is suggested to include it in the annual return and file a 9 or 9C to, as may be applicable, to render credibility to the data that is already getting incorporated in the form of a P&L. Moving to the next part, where once we know the limits, the applicability is fixed now. So we are going to file for a person. So what could be the purpose of asking us to file an annual return? Because this has been a bone of contention, both from a legal perspective as well as procedural angle. Many people tend to think, sir, 12 months monthly return, a summation is considered as annual return. So why are we even bothering about annual return? The key element here is legally, a return filed under section 39 is only considered to be a self-assessment return. That return happens to be GSTR 3B. If I am going to file an annual return, correct my data and report it to the department, what good it is going to do? Now, that will certainly help in substantiating at a later point of time that any difference or any data that is not reported in the monthly returns, but ultimately which is caught up in the annual return can always be said that there is no ulterior motive, there is no intention to suppress. It is all in good intention only. We have missed it and we have subsequently reported. That is how we can explain this and be able to substantiate our correctness. Hence, annual return, the sheer purpose is not just collation of data, but to report and actually, if 9C is applicable, to reconcile with my books of accounts, which I give it for any other authorities, say for example, Income Tax or Companies Act. And any mistake that I have done, any corrections that I need to make, which I may have missed out in the returns, can be carried out in the annual return. Corresponding liability, if any arises, shall also be paid. What would be the data points from where this annual return has to be started? The ideal data points are two from the GST portal itself, which is what is the GSTR 1 and GSTR 3B that has been filed by a taxpayer. And of course, the books of accounts, which has been finalized. The very first press release that was given in respect of annual returns, 4th of June 2019, and there was another press release on 3rd July 2019, very clearly clarified this point. If 1 is different from 3B, is different from books of accounts, what is the turnover that I need to report in annual return? It clarified, stating that the books of accounts is the final one, and that needs to form part of my annual return. Hence, if we find that 1 and 3B are not in line with books of accounts, it is like a tiebreaker. Books of account wins. What is the final turnover as finalized by? What is the final ITC that is as finalized in the books of accounts? That is what needs to find a place in the GSTR 9 and 9C. But the comparison needs to happen between these three. When I say comparison, we will delve into the details of that comparison in a while. But before that, the annual return related late fee is governed by section 47 subsection 2, which states that if it is belatedly filed, 100 rupees plus 100 rupees is the late fee, maximum of 0.25% of the turnover, which is under CGST. So another 0.25, which will become for SGST. So total of 0.5% if the turnover is going to be more than 20 crores. For lesser than 20 crores taxpayers, this amount reduces. But nonetheless, we are at a time when we are well within the due date. So we can target filing it within the due date itself. Hence, this is only an information to suggest that there can be penal actions that can be initiated against the taxpayer for non-filing of GSTR 9 or 9C annual returns. Now, when we look at the data points, as I was telling a minute back, my GSTR 1, my GSTR 3B, will it contain everything that I require to complete an annual return? The answer is not a clear yes, because only if all my turnover happens to be B2B, there will be an invoice-wise breakup available in my GSTR 1. But if there is going to be a lot of B2C or B2C, which is the only turnover that I have, in those cases, we will never be able to find out from GSTR 1 what constitutes or what forms part of my return filed data. Hence, the more summarized data is reported in GSTR 1 or in GSTR 3B, the problem is that we need to go back to the books of accounts to identify the breakup. For instance, GSTR 3B contains the data about my input tax credit, but that input tax credit, there is no breakup per se in GSTR 3B. That needs to be derived from my GSTR 2B, which we will discuss when we come to our ITC related aspects of GST annual returns. So we are making a linear comparison between GSTR 1, 3B and my books of accounts. Now, out of these three, if everything is in line, should ideally match, then that is from where my GSTR 9 originates. I'll be filing my GSTR 9. Of course, 9C, a reconciliation statement arising from there. I'm just giving a simple example of an organization which has got 3 registrations. One in Tamil Nadu, one in Maharashtra, and one in Karnataka. The more serious data point that as chartered accountants that we need to be focusing on is this only, because at the end of the year, we prepare a P&L at an overall organization level. I have taken an example of 3 states registered person. I am registered in Tamil Nadu, Maharashtra, and Karnataka. Will I be required to prepare books of accounts state-wise, or in my case, the registration number-wise, which happens to be state-wise? The answer is yes. Section 35, subsection 1, read with Rule 56, clearly states, every registered person shall maintain books of accounts at the principal place of business. In the eyes of GST, every registration is considered to be a registered person. When every registration is a registered person, every registration has a principal place of business. There must be books of accounts at that registration level. Hence, if I have more than one registration within the same state, the collective responsibility to file 9 and 9C, the aggregate turnover needs to be taken into consideration. And filing has to happen at a GST number level, and the turnover and the books of accounts should also be maintained at the level of every GST registration. So there are multiple ways in which this could have been achieved in the lead up to ending the financial or statutory audit process, where at that time itself this could have got into a consolidated method, and we could have had a signed trial balance or signed books of accounts with respect to states. If that is not happening, at least now we should be able to gather that information, because again, learnings in the past where we have uploaded the total company's P&L, let's say it contains 1,000 crores, where we have uploaded for Tamil Nadu the turnover only for 400 crores, the officer has sought the information from the P&L for the remaining 600 crores. When we were not able to provide, or we are not able to convince the officer with respect to what forms part of that 600 crores, which is not in Tamil Nadu, but which is there in the P&L that is uploaded. In some of the situations, it went bad. They were able to confirm the 600 crores as a tax demand, which resulted in a huge furor with respect to the total overall tax liability. It is a fictitious tax liability. Nonetheless, the data point was not perfect. That resulted in that. Hence, to avoid it, it is suggested to have the books of accounts GST number wise. What kind of books of accounts are we looking at? As I have listed out here, the turnover, the output tax liability, the input tax credit, and the transactions attracting RCM to the least. Of course, creditors and debtors would be required in case of creditors for the purpose of 180 days payment, in case of ITC. In case of debtors, yes, exporters, that realizations. So these informations, if we can collate and put it in one place with respect to every registration, that will be the ideal starting point for the annual return exercise. Once that is done, a macro level view of annual return is what lies ahead of us next. There are 4 parts to the GSTR 9, which I am splitting it in a very easy way or a convenient way that I have known or I have got used to in GST. There are only 3 parts in the annual return, which is output tax liability, input tax credit, payment of tax. That's it. So my output tax liability, where do I report? Table 4 and table 5 of GSTR 9. Why 2 tables? Table 4 contains my turnover on which I am liable to pay GST, plus my inward supply turnover or 9 subsection 5 turnover, where I am liable to pay GST but not as a supplier. So the tax paying turnovers will form part of my table 4. Table 5 will contain that turnover on which I am not liable to pay GST, but that forms part of my turnover. For instance, exempted, nil rated or LUT related, zero rated transactions. For ITC, we have got the dedicated 3 tables, table 6, 7 and 8. Most of our attention and discussion will happen around this today. Table 6 will contain all the ITCs split into the type of ITC within the category of ITC, being input services, capital goods. And table 7 will contain the various reversals that have happened during the year. These reversals under the appropriate rules under which it has been reversed needs to be reported here. And then we have table 8, wherein we do a comparison with the ITC that is reported by the opposite party, the suppliers. I am very carefully avoiding the word GSTR to be here. I will set the context here itself in terms of ITC discussion. Later on, I will expand this point and explain. Table 8A of 24-25, is it going to be GSTR 2B? Is it going to be GSTR 2A? For me, it looks like 2A because 24-25 dated invoices, an invoice which is dated within financial year 24-25 should ideally find a place in GSTR 2B of 24-25, any of the 12 months. If it is finding a place there, it should form part of my 8A. There is no doubt. But the 8A also accommodates the invoices which are dated 24-25 but reported after 1st of April 2025, which means it would have ideally been part of GSTR 2B of 25-26. Yet, just because the date of the invoice is falling within the financial year of 24-25, these invoices find its place in table 8A. Now, this looks very much like a 2A for me. Hence, I'm not going to call it as 2A or 2B. I will simply call it as 8A. But 8A for me, for all practical purposes, is equal to 2A. The third part of the annual return is going to be the reporting of tax liability, how it is settled, how it is paid, and there is also an element to disclose what is the liability of this year that has been paid in the subsequent financial year. That comes as part of table 9, 10, 11, 12, and 13. 12 and 13 predominantly talking about ITC of this year, availed or reversed in the subsequent years. And once this is done, we have the last set of tables which round up the overall annual returns, wherein only one table is mandatory, which is the HSN data pertaining to outward supplies. So apart from this, none of the other tables between table 15 to 19 are mandatory. Considering this as a macro level view, now we'll get into the micro level points that one needs to be careful when they are filing the annual returns. I will start off with GSTR 9, table 4. In GSTR 9, table 4, the first data to be disclosed is B2C supplies. Now here, the only point to make note of is when we report B2C supplies on a monthly basis, we would have reported it on a net basis. Net basis as in we would have reported the invoices less credit notes. In GST annual return also, B2C has to be reported on such net basis. This would be the only point where we need to be careful with respect to this data. It will get auto-populated by the portal. You want to make any changes to it, ensure, have this at the back of the mind that it needs to be reported on a net basis, B2C table 4A. On the other hand, when it comes to B2B, data that needs to be reported in GSTR 9, it is to be reported on a gross up basis. That is, what are the invoices alone should find a place in 4B. The debits and credit notes will be part B of table 4. So here, with respect to 4B, B2B invoices, only those invoices will find a place. The points to note or take care will be any outward supplies which fall under this category of merchant exporter sale, which is typically taxed at 0.1% under notification number 40/2017. That 0.1%, it so happens that sometimes it is either reported as deemed exports or exports even in some cases, which is not the correct classification, they must be reported as B2B only. And there are special rate transactions. Notification number 47/2017. Earlier, up until 2022 July, it used to be 5%. Post that, it has become 12%, where we make supplies to a government organization or a research purposes. In those specific scenarios, the recipient happens to be a specified government entity. The rates were at a concessional percentage. Now that is getting attracted in a transaction. That also should go into B2B. There is no other place that needs to be reported. 4C and 4D takes care of the zero rated supply related disclosure, where 4C takes in the export with payment of IGST category, whereas 4D supply to SEZ with payment of IGST needs to be reported here. The LUT related transactions do not find a place here. The LUT related exports or the exports under LUT or SEZ supply under LUT needs to be reported in table 5. Hence, they do not find a place here. Then comes the notification number 48/2017 part, which is deemed exports. Now, what we need to report as part of deemed exports is what is covered as deemed exports under section 147, read with notification number 48/2017, supplies to EOU, supplies to advance authorization license holder, supply to EPCG license holder shall have to be reported under table 4E, deemed exports. Once this is done, we need to be mindful of how and where it will get ultimately reflected. Now, what you are seeing in your screen is GSTR 9C, table 9. You may wonder, Shankar, what is this? Why are we having 9 and 9C mixed together? So this is where ultimately the data that is reported in table 4, accepting tax liability, should have to be populated ultimately. So the data that needs to go here on a rate-wise manner. Though GSTR 9 does not have a rate-wise breakup, the GSTR 9 reported data in table 4 must be reported in GSTR 9C, table 9, giving rate-wise breakup. There, not just the tax that is payable on my outward supply, the tax that I need to pay on a reverse charge basis shall also have to be reported in GSTR 9C, table 9. Hence, please ensure that data of tax liability accepted in table 4 of GSTR 9 does have a rate-wise breakup to enable us fill up the liability in GSTR 9C, table 9. Now, moving to the next aspect of GSTR 9, the one that I wanted to emphasize and give my inputs with respect to 4F advances, I am reserving my discussion in the next slide. Whereas 4G and 4G1 are the ones which I want to lay emphasis on. 4G contains all my reverse charges which I need to report. Now here, the press release given by the GST department has already confirmed that only the RCM that I have paid during the year needs to be reported here, not what I consider as payable. So what I need to report here in 4G is what I have paid during the year. Something I have missed this year, I am going to pay it in the next year. You may very well report it in the next year's 3B and in the next year's annual return table 4G. 4G1 is the new entrant into this foray. In table 4, this 4G1 has come. Some of you might remember that from January 2024 onwards, we had this table 14 and table 15 being introduced in GSTR 1. Now, this purpose of table 14 and table 15 is that table 14 and table 15 were addressing the specific e-commerce operator related transactions. The e-commerce operator related transactions needs to be reported from two dimensions. One, the person who is acting as an e-commerce operator needs to report it because he is paying the tax on behalf of the person who is doing the transaction. The second dimension is the person who makes his supply through an e-commerce operator needs to report his turnover. I will take an example. I will explain this. And whatever tables that I have discussed so far, that is table 4, starting from A to G1, all are editable. So there is no auto population. There will be an auto population, but that auto population can be overridden manually. For G1, the example that I was about to state was that, let us take the example of a hotel. The hotel will have two types of billing. One, it will bill and get the money across the counter. Second, it will take the orders through an online app. This online app or aggregator through whom they make the sale. This online app or aggregator is the person who is liable to pay tax on the transaction. But the turnover still remains the turnover of the hotel. So the hotel will be reporting its turnover, that is what is billed and received across the counter under B2B or B2C as the case may be. That part of the turnover of the hotel on which the e-commerce operator is going to pay the tax, there won't be any reporting by the hotel in table 4, but the e-commerce operator who has undertaken or who is vested with the liability under 9 subsection 5 to pay the tax on the transaction will be reporting that turnover and that tax liability in 4G1. So 4G1 is only for the integrating e-commerce operator on whom the liability to pay GST is vested. 4G is the tax on my inward supplies. 4G1 is my liability when I am acting as an e-commerce operator. This being said, now let's move on to the next aspect, which, as I said earlier, the three critical elements, where I start with table 4F, advances. We all know one thing for sure. From 14th of November 2017 onwards, by virtue of circular number 66/2017, if I receive advances in respect of goods, there is no liability to pay GST. The time of supply has been done away with it. Hence, for goods, if I receive advance, I don't have to pay GST on the advance. On the other hand, if I'm a service provider, the liability was there, continues to be there, if and when I receive a payment preceding an invoice. So if I receive an advance, I'm liable to pay GST on the advance without any doubt, as long as I am a service provider, or that invoice happens to be for a service. So this is the aspect that I'm going to discuss in table 4F, where what needs to be reported is what is the amount of advances on which I have paid GST during the year, minus what is the amount of advances on which I paid GST, but also invoiced during the year, which means to that extent, I would have adjusted. Ideally, GSTR 1, table 11A and 11B. A summation of these two is what is expected in table 4F. That is, when I raise an invoice, I will report, when I receive an advance, I will report it in 11A, pay the tax liability in that month. In the subsequent or following months, when I raise an invoice, I will report the invoice under B2B or B2C. But leaving it there only as an invoice will tantamount to duplication of liability. To avoid that, 11B table has been given to me, which I will populate only in the month in which I am reporting that invoice. So advance reporting, let us assume, has been done in April. The adjustment might have been in the month of August, wherein I will be reporting the invoice as well as 11B. This is to give a summary of what needs to come here. Now, what needs to be taken care is that if table 4F is positive or 0, it means this turnover is only a GST turnover. It will never tally with my P&L when it comes to 9C, because we have paid tax on advance. And for the purpose of P&L, we would have never recognized advance as a revenue. On the other hand, if table 4F happens to be negative, that will certainly create an action point from our end, where we need to investigate and check whether actually it is negative. That is, have they adjusted more than the advance that they have received? It could be a genuine scenario also, because a negative here in table 4F would only mean in this year, adjustment is more than the advance that is received. You may trace back to the previous year and see that in that year, an advance has been taken and remains unadjusted at the end of the year. Corresponding to that only, an adjustment has happened this year, resulting in a positive in the last year and negative in this year, no problem. But a negative here is an alarm bell. We need to check and find out actually whether over adjustment has happened. We have seen in the past that that has happened in some of the cases, because table 11B of GSTR 1 does not restrict us from over adjusting. It is, in fact, without any restriction, it allows. So please be careful when we are touching this table 4F, especially in case of service providers. If it is only a goods related person, 4F is of no consequence. Now let's shift our focus to part B of GSTR 9 table 4, wherein a debit note and a credit note. So when we look at a debit note and a credit note, what we need to be clear as accountants, which we have been taught from day one, we need to, for a minute, unlearn what we have been taught, which is what is a debit note and what is a credit note. Please do not even think about our accounting knowledge. We'll keep it aside. GST says what is debit note or what is credit note is an adjusting document given by the supplier. A debit note will increase the tax liability and turnover. A credit note will decrease the tax liability and turnover. That's it. Which means, though I may issue a debit or credit note for accounting purposes, it will not matter or it will not warrant any reporting in GST, because I am not the person who has raised the tax invoice. Tax invoice is the main document. A debit or credit note is only an aiding or an underlying document's adjusting document. With that, this part of the table needs to be filled up. If it has already been reported appropriately, it will get reported here automatically by the portal. Now here, one word of caution. Credit notes must have been reported in a return which is filed on or before 30th November of the following financial year. This time limit restriction is there for credit notes, whereas we don't have a similar restriction for debit notes. Hence, a new credit note, if it is directly attempted to be reported inside GSTR 9, please be careful. It will have all the ingredients to be rejected at a later point of time, because it must be reported in a return on or before 30th of November. And as I told you earlier, annual return is not a self-assessment return. This has become a bone of contention between department and taxpayers in the past as well. Hence, ensure that it should have already found a place in your October's return. Else, we are not in a position to, or even if we report it in GSTR 9, there will be questions and queries surrounding it. And the last part of table 4, part B, is the amendments. The amendments which are done, carried out in the invoices, that which we have reported in our monthly returns. Please ensure whatever amendments are done, to that effect, e-invoice is also raised. Many people do amendments in GSTR 1 and forget about e-invoice. This can result at a later point of time an ITC rejection for one of our customers. I'll give a simple example. I have raised invoice on Mr. A, but I have reported that in e-invoice, I have reported that in GSTR 1, but later I come to know I have made a mistake. I have amended my invoice from Mr. A to Mr. B. There is no change in the taxable value. There is no change in the tax value. This amendment I have carried out in GSTR 1, and that's it. I have not done anything more. Now look at the scenario here. Mr. A will have the e-invoice in his name, but not the 2B entry. Because it is logical also that he cannot take input tax credit. Whereas look at Mr. B, to whom I have given the ITC through 2B. Maybe I would have given him an invoice also, but that invoice is not an e-invoice. So B, strictly speaking, as per Rule 48, Sub-Rule 4, is in possession of a document which is not a proper invoice. Hence, his ITC will get disturbed by the department, will be announced as ineligible. Hence, please be mindful of this amendment-related entries see whether a corresponding change has been made in the e-invoices also. Once this is done, the liability attracting part of GSTR 9 is completed. We now move to the next part where we are going to report certain turnovers, but there is not going to be any liability that one needs to report as part of this. The zero rated turnover in the nature of exports as well as supplies to SEZ both needs to find a place in table 5A and 5B. The reason I stress on LUT is that no tax liability zone is table 5. If I had done it with payment of IGST, then I should have reported the zero rated under table 4 itself. 5C is my turnover, but on which I am not liable to pay GST. My recipient is liable to pay GST. Supplier on whose supply of goods or services the recipient becomes liable, that needs to be reported in table 5C. 5C1 is the new entrant in this annual return, 2024-25 annual return. Now, this is where, please recollect my example on the hotel. The hotel, which has supplied certain amount of their food through the e-commerce operator, the aggregator, the e-commerce operator would have reported that turnover in table 4 and would have paid the tax. But the hotel should also include it as part of its turnover, but not the one on which they are able to pay GST. Now, this is where that hotel needs to report its turnover. So it is 5C1, a new place that is given January 2024 onwards. Table 14 and 15 have been inserted in GSTR 1. Table 15 corresponds to what we discussed in table 4 with respect to the e-commerce operator. Table 14 and its disclosure corresponds to 5C1, which is applicable for the person who is supplying through an e-commerce operator. And then we have the exempted, nil rated and non-GST turnover. Please be very, very careful when reporting this exempted, nil rated and non-GST, because non-GST does not attract proportionate ITC reversal. Hence, non-GST should be reported in 5F, whereas exempted, nil rated will attract proportionate ITC reversal, barring a few as per rule 42. Barring a few, remaining exempted turnover will certainly warrant a proportionate ITC reversal. Hence, ensure that what is getting reported here is appropriately getting reported. For instance, a real estate person wants to report the land sale will ideally have to be reported in non-GST, whereas a sale which is after completion will have to be reported under non-GST. Yet we can consider that as part of the turnover on which ITC needs to be reversed. That comes under 17 subsection 3 provision. So once this is done, table 5 reporting, which is only in terms of turnover, will bring us to a conclusion that, okay, table 5N. 5N is table 4 turnover plus table 5 turnover, of course, after removing the RCM related turnover reported in 4G of table 4 and 4G1, both being removed. Now, this is my turnover for the year. Taxable turnover, tax liability attracting turnover, non-tax liability attracting turnover will be there as part of my 5N. Ideally, this should be the stopping point, but there is a possibility which many of us also have done, we have done in the past, which is pertaining to the turnover of this year getting reported in the subsequent year. Either the invoice is completely missed out in this year, it got reported in the next year, or there is an amendment to that invoice which was reported in 24-25 originally, but the amendment happened in 25-26, or it could be a credit note or a debit note which pertains to this year, but which get reported in the subsequent year. So this is what needs to be reported in table 10 and table 11. Table 10 is for the upward movements in terms of tax liability and taxable value. Table 11 is for the downward movements, which is the amendments of the credit notes. Once this is done, now we are done with our turnover. 5N plus 10 minus 11 leads us to the turnover where we should have ideally been reported. Once this is done, this is the turnover which we are going to reconcile in our GSTR 9C. All the liability related reporting should ideally find a place within this. Now, is there any issue in this sequence of reporting? Yes. Table 4 that I discussed, where we would have reported certain turnovers of last year, that is 23-24, in 24-25. Those invoices, those value of turnover or tax should not form part of my table 4 or table 5. Because, for example, let's say a B2B scenario. March month invoice, I have missed out to report it in March. I have reported in the month of May. When I had done that reporting in the 23-24, I'm talking about 23-24 financial year, March, invoice reported in May 2024. Tax would have also been paid in 3B of May 2024. Now, what sort of anomaly that it will create is that in table 4 of 24-25 financial year, that turnover will not find a place. But when it comes to tax payable and paid for the year, that turnover will ideally will be available, because in 3B we would have paid the tax only in the current year. So this is the only issue that I see in table 4 reporting. It does not give room for segregating and reporting the turnover of previous year accommodated in this year. Whereas 24-25 turnover reported in 25-26 is very much available in the form of 10 and 11. So with this only shortcoming in mind, you may proceed with filing this GSTR 9 liability related data. Now let's move to the next part, which is the part that is pertaining to ITC. Before we step into this ITC, I want to sensitize or give a view in form of Circular 170. What is the expectation of Circular 170 and how that expectation of Circular 170 needs to be fulfilled, because this is very, very important. Based on this only, our GSTR 9, table 6, 7 and 8, even 12 and 13 reporting have been modeled now. I will give a quick summary of the expectation under Circular 170. Any ITC that is appearing as part of my B2B in table 4A5 should be availed in the same month without any exception. But if I feel that something out of that 4A5 is ineligible or completely unrelated to me or completely needs to be reversed, which I do not want to reclaim, that reversal needs to be happening through table 4B1. On the other hand, I am not sure as to whether this ITC pertains to me, which have come in my 2B, which I have taken in 4A5. I may avail it in future. I just want to keep it pending. Then in those cases, we do a soft reversal in 4B2, other reversals in GSTR 3B. Once that is done, we know that this will be reclaimable in the future. Whenever we reclaim in the GSTR 3B of the subsequent periods, that time we will be doing two things. When we reclaim, we will be disturbing table 4A5 of that period. It would already have only what is reported as per 2B, auto-populated. Can I amend or edit it? Yes, we can. To what extent? To the extent that we are reclaiming in that month. So I will upward revise if I am reclaiming this 4A5. In 4A5, the ITC that was available in the 2B of earlier months, which I soft reversed in 4B2. If I want to reclaim that, I will increment my 2B populated data with that ITC. Having done this, will I not get a notice from the department because I have now in 3B taken ITC, which is more than what is appearing in my 2B. To overcome that, Circular 170 says, please go and report this amount in 4D1 also. 4D1 does not disturb my electronic credit ledger. It is only a disclosure point. So if I report it in 4D1, then what happens is, when overall ITC, have I availed in excess or not, that calculation is made, weightage is given to this 4D1. That is also deducted from the extra amount that I added in 4A5. If there is no excess, after deducting 4D1, I will not be receiving a notice. So this is what is the Chakravyuha that is formed by this table 4A5, 4B1, 4B2 and 4D1. This is in our 3B. So all along I have been discussing only about 3B so that I can set the context for our next discussion, which is our ITC reporting in GSTR 9. Now in GSTR 9, table 6 is the place where we will immediately encounter one straight challenge. And it is like this, no? None of us would have been spared of a notice where the officer would have asked, there is a mismatch between the ITC that is availed in 3B versus the ITC that is available in 2A. I don't think any of us can say we never received such notices for any of our clients. Everybody would have got, in fact, I would say every assessee would have got that as a query, if not in 1 year, maybe in the earlier years or the following years. Now, how this GSTR 9 is going to address that one big problem is what it does in table 6A. Now, this is an auto-populated table. We cannot edit. What gets auto-populated in table 6 capital A is that the ITC, which is availed by me in my GSTR 3B, the gross ITC, table 4A part, the total, that gets populated in my table 6A. I cannot edit it. All I am expected to do is give a breakdown of what I have availed there. So the insertion in this 24-25 financial year, table 6A1 is the most important insertion, which will avoid all those notices that I just spoke about a minute back. How does it achieve that? In this line, table 6A1, what am I supposed to report? What am I expected to report is the invoices which are dated 23-24. I am speaking only from the perspective of 24-25. So I'm sticking to the financial years. Any invoice which is dated 23-24 for which I have availed the ITC in 24-25. There could be multiple reasons. I would have availed reversed reclaim in 24-25. I would have availed reversed in 23-24, only reclaimed in 24-25, or that invoice I would have availed, reversed, reclaimed, everything in 24-25. In any of the scenarios, irrespective of the scenario, the ITC availed on account of those invoices must be reported in 6A1. This resolves the biggest issue, which is when from 6A, the ITC pertaining to earlier years availed in this year is taken off. We end up with 6A2, for which the breakup needs to be given, wherein in 6B table, we give the breakdown of B2B ITC. Ideally, my 4A5, the ITC that I have availed in GSTR 3B, table 4A5. The least of trouble that I need to take care is, I should give the breakup between input services and capital goods, and the notification continues in terms of not making it mandatory to report the distinction between input and input services. In other words, capital goods need to be specifically identified and reported, the ITC availed in respect of capital goods. But input and input services, there need not be any mandatory need to split the two. We can report it as one line itself, either an input or input services. So this is where 6B. Now, if you take into consideration 6A, I would have had, say, 100 invoices of 24-25 availed in 24-25, plus 20 invoices of 23-24 availed in 24-25. These 20 invoices will get eliminated in the form of 6A1. So now in 6B, I will be reporting only the ITC of those 100 invoices. In what way this is very, very good, Shankar? If you ask me, just go to table 8. Table 8, in 8B, table 8, 8A is getting auto-populated. Strictly speaking, 2B is what is the word that they have used. I have already elaborated what gets populated. Be that as it may, what gets compared with the amount that is getting reported in 8A is 8B. In 8B, earlier, till last year, 6B and 6H both used to come for comparison. Now it is only 6B. So now you would have realized the 100 invoices pertaining to 24-25 is only coming to 8B for comparison. Hence, if my 8D happens to be negative, I am in a position to explain, because I cannot say last year ITC availed in this year. That is why you are seeing a negative in 8D, because that may not be tenable after the introduction of 6A1. Hence, we need to appropriately and carefully report 6A1. And what will not form part of 6A1, I'll give you that idea now. 6A1, we are not supposed to report Rule 37 and 37A related reclaims. Rule 37 is non-payment to my creditors within 180 days, where I pay subsequently and reclaim the credit. That ITC, even though it pertains to earlier years, need not form part of 6A1. Then where am I supposed to report it? 6H. Similarly, Rule 37A, where I have taken the ITC based upon the 2B entry, but by next year September, I find out that my supplier who reported in GSTR 1, based upon which I took the ITC, he never filed his GSTR 3B. So as mandated under Rule 37 capital A, I am supposed to reverse this ITC before November. And subsequently, whenever that gentleman makes the payment in his 3B, I am entitled to take input tax credit. Both this 37 and 37A bear an exception to 16 subsection 4 time limit. So I don't have to follow when I am reclaiming these two under these two rules. Hence, they have said, if you are reclaiming any ITC pertaining to earlier years, do not show it under 6A1. Please bring it to 6H. Putting it in 6H, will it put my ITC comparison in table 8 in a spot of bother? No. That is the reason why 6H has been removed. In terms of comparison in 8B, only 6B is getting compared. The rest is as normal as it was earlier. The unregistered person RCM, what we have paid needs to be reported in 6C. Registered person RCM needs to be reported in 6D. Here, again, my input in terms of word of caution is that please ensure whatever RCM that are appearing in GSTR 2B against the taxpayer, whether everything has been discharged. In most of the cases, it will be proper, but in some of the cases, there will be a twist. The twist will be that we would have paid the appropriate tax, but the other party would have reported it in a manner in which we cannot even understand. For example, the other party could be a GTA who would have reported it only the basic value, and tax he would have put 0. Possibility number 1. Possibility number 2, he would have reported the tax, but he would have reported it under IGST, where we know, reading with place of supply rules, place of supply provisions, we know it needs to be paid under CGST and SGST, but he would have put under IGST. We cannot do anything, but we need to have a reconciliation for that, because notices in future will come for this. When you say we have paid for registered person, automatic comparison will be with 2B. When we are comparing with 2B, have we paid everything that appears as RCM? Yes, in my GSTR 2B. Have we done the reconciliation? That will be the question. And the next part is unregistered RCM, whatever arising out of the books, we would have automatically paid it and we would have reported it in 6C. So 6B, 6C, 6D, normal, 6C and 6D, like last year, only one reconciliation point that I told you. And then 6E, import of goods through bill of entries, those needs to be reported, split between input and capital goods alone, because import of services has a specific entry, table 6F. When it comes to import of services, again, a word of calculation or a caution is, please check all the section 195 TDS related payments, whether RCM is attracted. If attracted, have they paid? This check that we can do, because 15CA, 15CB would have also been given by us, or in 3CD, para 34 would have been populated by us only. So check whether that completeness is ensured. And then in table 6G, the ISD related ITC, this will not have much of attraction in 24-25, but from 25-26 onwards, this will attract more attention, because the ISD registration has become mandatory from 1st April 2025. Hence, to the extent what has been populated by ISD, we may report it in 6G and 6H. The reclaim of ITC that I told you earlier needs to find a place here. Now, please stay with me on this. I'm going to tell something like a mathematical formula, but that is how I have understood it. So I will have to also tell you the same way only. What should I report here? What should I report here, or what should I ideally be reporting in table 6Hs? One, the 37 and 37A reversals of earlier year, when it is reclaimed, that will find a place. And two, and the most important one, if the taxpayer has followed circular number 170 across the year, then I'll give a typical example. April month, an invoice comes. He avails the ITC in 4A5. He does not know or does not have it in the books of accounts. Hence, he soft reverses it in table 4B2. So in April 2024, availment and reversal have happened. May, there is no impact on that. Nothing happens. June, that invoice actually comes to his hand. He realizes that, okay, I'm supposed to book it in the books of accounts. He books it in the month of June. He wants to now avail it in the month of June. He would have availed it by altering his 4A5 of June, correspondingly reporting it in 4D1. Now, this is the story with respect to 3B. Now, come here. In GSTR 9, how am I supposed to report it? You will have to report it 3 times. The first time ITC availment needs to be reported in 6B. The first time reversal needs to be reported in 7H. So this will knock off the availment and reversal, which we did in the month of April. Now the reclaim that I have done in the month of June needs to find a place in 6H. Only if these 3 steps are followed, we will be able to have a direct correlation between our reporting in 3B with GSTR 9 table 6. I'll repeat one more time. Table 6H alone. What needs to come here? Yes, 37, 37A of earlier years will come here. Plus, we need to bring here the ITCs which have been availed and reversed during the year and reclaimed also should form a place here. Availed 6B, reversed 7H, reclaimed 6H. That's it. So this is how this table needs to get populated. Once this is done, the majority of the ITC pertaining to table 6 is over. Now all that we need to focus on is table 7. Now in table 7, what we need to report is, in table 7, we are supposed to report ideally the reversals that we would have done in 4B1, split between various items. So 4B1, we would have done a combined reversal of all the ones which we know that we are not eligible to reclaim. For example, it could be a block recredit, it could be a one under 37, 37A, or an ineligible ITC under or block recredit under 17.5, or to be reversed proportionate ITC under rule 42, 43. Now those need to find a place at the appropriate locations, because in this year, if you are reversing anything under 37 or 37A, there is a 100% possibility that we'll be reclaiming it in the future. When we are reclaiming it in the future, it needs to go in 6H. At that time, when it goes into 6H, we will have to explain at that time. Hence, please ensure 37, 37A related reversals are appropriately reported in this year annual return itself, so that we have a place where we have placed it appropriately in this year, so that it can be reclaimed in a subsequent year and substantiated also. Once this rule-wise reversals are reported, table 6H, 7H, as I told you earlier, is the place where the soft reversals come and sit. The 4B2 soft reversals that I have done during the year in my GSTR 3B, those will find a place in table 7H. Once these are done, my net ITC will get reported. But please understand, many of us have had this doubt, and in this case also I want to repeat this. Table 7J in the earlier years used to ideally tally with our net ITC availed as per 3B. In this year, it will not tally because we have already eliminated certain ITCs as part of 6A1. Hence, if you really want to tally your 3B net ITC of this 12 months with annual return, it should be 7J plus 6A1. That can only tally my total net ITC as per 3B with my GST annual return. The other part that I was talking earlier, the table 8, is it 2A or 2B? In my view, it is 2A only. And please note, the first editable line in this table 8 is 8C. 8A gets auto-populated, 8B gets auto-populated from 6B. 6B is editable. Now 8C, what am I supposed to give? The ITCs which are there inside this 8A, but which I have availed in the next year. But please understand, 24-25 availed, 24-25 soft reversed. Availed in 25-26, reclaimed in 25-26 need not form part of 8C, because we would have already reported those invoices in 6B, which would have flown to 8B. Reporting it again in 8C will only duplicate and create negative in 8B, which is not the intended purpose. So if something is finding a place in 6B already, only reclaimed in the subsequent year, do not bother reporting it in 8C. So ideally, for a person who is perfectly following circular number 170, 8C should be 0. There is a new insertion in table 8 in the form of H1, 8H1, where for imports also, we have been given an additional facility to report this ITC, that is the import related ITC, which is not availed in this financial year, though it is auto-populated. We are intending to avail it in the next year, or we may have availed it in the next year. That needs to be reported in 8H1. So this is again a new line only for this year, which will solve a lot of notices that we have had in the past in terms of why so much of import is there, why you have not availed, you have availed in the next year, where did you report? All these questions will get answered if we properly incorporate it in 8H1. Now we move on to the last bit of ITC related discussion, which is table 12 and table 13. Now what am I supposed to report in table 12 and table 13 is that ITC of this year but availed in the subsequent year is table 13. ITC pertaining to this year reversed in the subsequent year needs to be reported in table 12. This 12 plus 13, the net amount, need not necessarily be equal to my 8C, which was the case till last year. This is not required from this year, because what needs to come as part of table 13 is ITCs of this year invoices availed in the subsequent year 3B and reversed in the subsequent year 3B, that needs to come in 12. So ideally, a net of 12 and 13 will be the 6A1 of 25-26 annual return. Table 13 and table 12, the net of it will ideally be the 6A1 of the next year. Hence, reporting it properly in this year matters, because we cannot be altering our 6A1 in the next year. So whatever ITCs that I have availed pertaining to the invoices of 24-25 from April to October 25-26 need to be identified. Any reversals in the form of credit notes, any reversals done in the form of other rules, everything needs to be captured, reported appropriately in 12 and 13, and the net of this will only find a place in my 6A1 of the following financial year. So a very, very important change. Earlier it was very simple. 13 minus 12 used to be 8C, not anymore. 8C is only those invoices appearing in 8A, not even availed by me once. That is only 8C. But 8C and 12 and 13 can be different, is what this annual return has established. Now we move on to the next part, which is the table number 9. Table number 9, a new column has been inserted. This new column, the column number 9, I have highlighted 2 columns here. The reason being, in this table, table 9, where I report my tax liability accepted vis-a-vis tax that I have paid. Now, in this table, table 9 or the column 9 that has been inserted is a new insertion which is uneditable. But we used to have this column as a Excel working every year in the past. Good that it has been brought here. What is the purpose of this new column? Now we shift our focus to column number 2. Column number 2 is the place where I, as a taxpayer, am supposed to report what is the tax that I am liable to pay for the financial year. Ideally, it will get auto-populated. Yes, it will get auto-populated from a 3B, but we have a responsibility. The responsibility is if we are accepting any new liability. My personal view is new liability could be of two types. Additionally, reporting a turnover and tax liability, or any reversals that have been identified during the annual return. Both will find a place here. Now, that reversal or that acceptance of further liability must be reported in GSTR 9. How? This column, which is the only column that is editable in this whole table, we need to come and increase the tax liability to that extent. There are multiple schools of thought in this manner, but I will try and tell you my piece of understanding. See whether that appeals to you. If I am reporting my liability here, it is not just a tax that is payable, it is payable on account of output as well as reversal of input tax credit. If I report it here and what I have paid through ITC or cash gets deducted, now column 9 will automatically reveal what is my further tax liability to be paid. This is very, very critical because this is the amount for which I am going to pass a DRC 03 and tell the officer that it has been paid during annual return. So this is the information through which we can communicate to the officer saying, I have accepted this liability, due to which you are seeing a difference in table, in column 9 of table 9, I am paying this tax liability by DRC 03. Easiest way is this. No, I have one more complication. The complication is, sir, I have paid more during the year because last year, 23-24 turnover was accepted and reported in 24-25. Invoices relating to 23-24 were reported in 24-25. To that extent, my payment would be more. To that extent, my payable, what should I do? Reduce the payable so that this last column becomes negative. This is a clear indicator that in the earlier year, you would have reported something in table 10 and 11, which is liability of this year paid in the subsequent year. And this table 9, column 9 stands as a proof that you have done that in the subsequent year. So here, a payment in excess would mean for the last year, I have made the payment in this year. Hence, I am of the view, this table 9 column 2 needs to be properly populated if we are accepting additional liability in the form of output or additional liability in the form of reversal of ITC in GSTR 9. And I am stating this from the perspective of 9 alone because there are people who will have 9 only. They may not have 9C. This is the ideal way to report for those people because we don't have to have a reconciliation. It can all get over within GSTR 9. And once this last bit of 9 is completed, we are left with only one mandatory information that needs to be reported, table 17 of GSTR 9, where HSN-wise data of my outward supplies needs to be reported. Once that is done, yes, we are completed. We have completed the compliance requirement from the perspective of GSTR 9 in the annual returns. The HSN-wise outward supplies, the care should be taken to ensure that all the paise level data is also matching. The best thing would be to round off everything to the nearest rupee across the annual return so that this HSN-wise data doesn't end up being a pain in terms of matching it from a paise level aspect. Rather, it becomes more of an interpretation or an exercise which is more fruitful rather than troubleshooting for those commas and paises. The other parts are optional, and I am assuming whenever something is not mandatory, like me, many of you will also be not filling it up. Hence, I'm not getting into the details of it. Due to paucity of time, I will just shift my focus to GSTR 9C. Once we complete the discussion of GSTR 9C, we can take some questions as well. Now, GSTR 9C, one of the elements, or I would say two such elements, only accountants will understand, is one, the unbilled revenue. Now, what do I do with unbilled revenue? The unbilled revenue should be properly reported. The unbilled revenue properly reporting is what GSTR 9C has a specific place for it. Hence, that needs to be reported at that place. Similarly, advances. A real estate or any service provider, advances received, taxes paid on the advance, yes, that gets reported in GSTR 9. But what is the opening balance and closing balance of this? Now that gets reported only in GSTR 9C. So I will introduce 9C in a different manner. GSTR 9C in table 5A, it is all editable except from the 9 data, which gets auto-populated. So in 9C, what do I report in table 5A, which is my turnover reconciliation? I need to report the turnover, not for the whole country, not for the whole P&L that I carry. Very, very clearly given, which I have highlighted also. The turnover shall be derived from the audited financial statement. It is not from the audited financial statement, it should be derived, which means the audited financial statement might contain for various GST registrations. If we are filing annual return for one GST registration, then we are supposed to derive the turnover for that registration. Please recollect my discussion earlier on, an example of Tamil Nadu, Maharashtra and Karnataka turnover person, how to arrive at the total and why should we have the individual state-wise books of accounts or the GST number-wise books of accounts. That stands vindicated by this expectation of table 5A of GSTR 9C. Now to this, we do a typical accounting adjustment, one for unbilled revenue. Now unbilled revenue, I'll have an opening balance as well as a closing balance. Assume I am a software organization, IT or ITES organization, or I could even be a contractor or a works contractor. In all those cases, I would have received advances, I would have paid a tax on advances. How do I bring it into my annual return? One, when I pay tax on it, I bring it in 9. When I adjust it, I bring it in 9. But overall, when my turnover of P&L needs to match with the turnover of GST, this part will only be managed only when opening balance and closing balances are reported. My P&L will contain unbilled revenue. Opening balance, closing balance, net will be there. But in my annual return, I'm supposed to disclose opening balance of unbilled revenue, closing balance of unbilled revenue, table 5B and 5H respectively. The adjustment will be done by the system. This directly should correspond with our books of accounts. The advances related should also have a similar reporting where we report the opening balance of unadjusted advances. Of course, the during the year adjustment would have come in table 4F of GSTR 9. The closing balance of unadjusted advances needs to be reported in 5C. So 5C and 5I, if we report the closing and opening balance of advances, coupled with the unbilled revenue related adjustments, the GSTR 9C reconciliation will become that much more simpler, that much more data filled, so that tomorrow we need not worry about where was this adjustment coming from. Properly reported in unbilled revenue, we can prove it from the books of accounts. Much easier. The challenge is there are certain elements that we need to be, or we should have been careful by finalizing the annual accounts itself. The most common pitfall is stock transfer between one unit to other unit wrongly considered as turnover. This can happen, or see whether it has happened. If it had happened, table 5D of GSTR 9C will take a hit because there will be deemed supply. I am having a branch in Chennai, I am having a branch in Bangalore, I am doing a stock transfer to Bengaluru. This stock transfer ideally should not have formed part of my turnover in 5A. My turnover in 5A should only be my P&L turnover. If that is the case, to tally that turnover with my GST turnover, I need to report something in 5D, which is my stock transfer turnover from Chennai to Bengaluru. That gets reported in 5D, it gets resolved. So if a mistake had been committed in 5A itself, then 5D will not have any amount to be reported. Ensure that that is getting properly reported. The next one, with respect to credit notes, already we discussed about debit and credit notes. The only credit note that will find a place directly in GSTR 9C, but not in GSTR 9, will be those credit notes which are popularly known as financial credit notes or commercial credit notes. In other words, they do not carry any GST reduction. These credit notes are given only for the basic value. They do not have an impact on the GST liability. Those get reported in GSTR 9C in what way? Only as reconciliation items. The reconciliation items gets reported something like this in table 5E, 5F, where we report discounts which are rather 5F and 5J, where we report discounts are credit notes which are allowed in the books of accounts, but which are not permissible from the point of view of GST. So I have given a reduction only in my basic value. I have not given a reduction in GST. Hence, my GST turnover will be higher. My P&L turnover will be lesser. That is why we add this 5E and 5J, so that we 5F and 5J, so that we can arrive at GSTR 9 turnover. Hence, financial credit notes deserve an adjustment here. The other elements that form part of GSTR 9C turnover reconciliation will be one, the turnovers that the organization, let's say we are filing it for a unit which is an SEZ. So that SEZ that does any outward supply, it is technically not taxable under GST, but it is forming part of their turnover, P&L turnover. That needs to be adjusted in 5K. 5L is a very, very optimistic scenario. Somebody who was a composition person during the year has become a person more than 5 crores. Warranting annual return 9C. If that is the case, please report that turnover during the year on which he was liable as a composition dealer here. 5M requires an accounting eye, because let me take a simple example. I'm supplying goods to my customer. Let's say the supply of goods to my customer is to the extent of 1 lakh rupees. My customer says, okay, freight also you please bear, Shankar. I'm saying, okay, sir, 10,000 rupees. So 1 lakh and 10,000 plus GST. This is what I have billed him in my invoice. When it comes to accounting of the same in my books of accounts, I would have accounted only that 1 lakh as my turnover. Whereas the 10,000, I am at liberty either to report it as other income, or I can go and net it off against my expenditure on account of freight. Either of it, if I do, you will see that my turnover, what I am reporting in 5A, will never contain this 10,000 on which I would have paid GST also. So how to bring it into picture? This is one of the common things that we have seen. Bring it in 5M. Any adjustments under section 15 needs to find a place here. Likewise, any other adjustments which are in the nature of reduction also shall find a place in 5M, which differs from business to business. Forex fluctuations, very specifically from a GST perspective, not the forex that is completely contemplated under AS 11. This is pertaining to GST transactions. Following Rule 34, how the rates were used in GST vis-a-vis what is the difference, that needs to find a place in 5N. And now we come to the omnibus 5M. What should form part of 5M? 5O. The 5O omnibus, anything and everything which is not specifically listed so far. What is it that I have seen commonly coming here is the asset sales. Whenever we sell assets during the year, this will never form part of our revenue from operations. It will be always sitting in our other income. Should I reconcile in table 5A only revenue from operations? No. The overall income, total income should be reconciled. While doing that, obviously, asset sale will play a spoil sport, because asset sale would have happened at some value, but in the P&L, we would have recognized only the profit or loss on account of sale. The profit or loss on account of sale is not the value on which GST is being levied. So GST will be levied only on the sale value of the asset. Hence, 5O will always have an adjustment to take care whenever there has been a sale of asset during the year. To start with, we need to look at 5O from the perspective of asset means. We need to look at the sale of assets, which we would have reported in our balance sheet. Sale of asset, if it is an ITC availed fixed asset that is being sold, 18 subsection 6 should have been followed ideally, where 5% input tax credit only becomes eligible, and the remaining gets eligible, liable to be reversed. If it is more than 5-year-old asset, then of course become fully eligible. If it is a non-ITC availed fixed asset, then we need to go into the further analysis of, is it a motor vehicle? If it is a motor vehicle, then non-ITC availed motor vehicle notification number 8/2018 benefit is there. See whether that has been taken by the taxpayer, accordingly disclose. There could even be a sale of motor vehicle for 10 lakhs during the year, which could be completely away from GST for the simple reason the carrying value or the WDV as per Income Tax Act for that motor vehicle could be 12 lakhs. It is a non-ITC availed motor vehicle, but sold only for 10 lakhs. There is no question of GST on the transaction because of notification 8/2018. See whether this kind of transactions are there and they attract the reporting in 5O. If it is a non-ITC availed fixed asset, but it is not in the nature of motor vehicle, then the life is simple. On the sale value, pay GST. The other item which can form part of our scheme of things in table 5.0 is deferred revenue. This is the second item that I told you. Apart from unbilled revenue, the other one which accountants need to are the only ones who can understand and appreciate the importance. Deferred revenue, when it needs to be reported, there is no separate place to report it in table 5, like unbilled revenue, opening, closing. There is no such place. Hence, the net of deferred revenue, opening and closing, needs to be reported in table 5.0. So the ready-made adjustments which can travel into 5.0 are: one, the asset sale related reporting. The next one is deferred revenue related reporting. These will standard find a place in the omnibus clause, which is 5.0. Depending upon your nature of scenario, that could be something which is specific also. Please take care of that reporting. Now we move on to the table 7 of GSTR 9C. Table 5, the elaborate reconciliation. Any differences arising out of that, we need to give the explanation in table 6. Once that is done, we travel to table 7. Now in table 7, the turnovers which are there in table 5 of GSTR 9 gets reported in a different way for the purpose of reconciliation to arrive at from the P&L turnover to the turnover on which tax is payable. So the ones which are in table 5 will come here to table 7. 5 of GSTR 9 will come to table 7 of GSTR 9C only to reduce the turnover that we are starting from P&L and we have arrived at. And then what we see as 5E and 5F should ideally tally. And this is the turnover on which tax would have been paid. So here there is one conspicuous addition, which is 7D1, which, as I stated earlier, it is something that my turnover, but on which the e-commerce operator has paid the tax. I have to report my turnover. 5C1 of GSTR 9 is what will get reported in 7D1 of GSTR 9C. Rest all are data populated from table 5 of GSTR 9 only to arrive at the taxable turnover or the turnover on which tax liability is to be discharged. Now on this tax liability to be discharged, how it has been discharged or what is the liability that I need to pay, that needs to be given in table 9 of GSTR 9C. I touched upon this table when we discussed about table 4 of GSTR 9. So please recollect, once we have done table 7 reconciliation in GSTR 9C, that turnover which we are seeing in 7E, that is the one which we will be populating here in the taxable value, plus those turnovers on which I am liable to pay tax under RCM. 5% what I see here is for my turnover on which I am liable to pay. 5% RCM, what we see here is my turnover on which tax liability is to be, rather somebody else's turnover on which I am liable to pay GST or RCM. And similarly, a new line has been inserted in table 9 of GSTR 9C. This K2 is for that e-commerce operator. Remember the person in 4G1 of GSTR 9, for him to report it in table 9K2, the tax that he needs to pay. And specifically, the taxable value has been blocked there because it is not his turnover, but it is his liability. So only the liability needs to be reported. The turnover will not form part of the e-commerce operator's turnover. So this is how the revised reporting in table 9 with respect to rates stand. And further, the last bit of our discussion is with respect to the ITC reporting in GSTR 9C. The input tax credit in GSTR 9C needs to be reported after considering a segregation that which I'm going to discuss now, which is the ITC that I am able to see in my GSTR 2A or 2B, whichever way you want to call it, that 8A, whatever is there. Now what we need to see out of that, how much is booked and availed in 24-25? How much is booked in 24-25 but availed in 25-26? How much is booked in 25-26, availed in 25-26? Apologies for the error there. It is 25-26. It is not 26-26. So this 3 segregations has to be there, which will determine my reporting in table 12 of GSTR 9C. What needs to come in table 12 of GSTR 9C is, I have to report those ITCs which I have booked and availed in this year. Yeah, that is normal. But booked in 24-25, but availed in 25-26, this needs a special mention. But please remember, booked in 25-26, but the invoice pertains to 24-25. Availed in 25-26 are not one and the same with the second one. The second one is booked in 24-25, but availed in 25-26. The third one is booked, availed both in 25-26. This will never form a part of my GSTR 9C table 12. So the table 12 ideal reporting, which is again a table which is reported on a gross basis. There is no CGST, SGST, IGST segregation. We just report the total ITC as per the books of accounts in table 12A. From that, we adjust 2 elements. One, booked in the earlier financial year, claimed in the current financial year gets added, because that wouldn't have been there in this year entries in the books of accounts. Less, booked in the current financial year, but to be claimed in the subsequent financial year. Now, this is what I told you is the second item. Booked in 24-25, but to be availed in 25-26. This 12C will not contain what is booked in 25-26, availed in 25-26, but invoice is dated 24-25 will never come as part of my 12C. Once this is done, my ITC reconciliation is also complete. Table 12, table 14, which requires expense-wise breakup to be reported, is not mandatory. Since it is not mandatory, my suggestion is not to complicate things by reporting it in table 14, because it requires elaborate analysis, which is the reason why it has been kept as optional. Better to stick to the option of not filling it up. And that brings us to the end of my discussion, wherein the GSTR 9 and 9C related disclosures and how that has to form a part in our annual return. We have taken that. Now what I will do is I will stop sharing my screen and I will take those questions which has come in the either in the chat box or in the Q&A.
Thank you, Ji. I think there are a few more questions from the beginning onwards. Can we go one by one, Ji?
Yes, sir. Yeah.
The first question is from Sivaraman
Sivaraman
Vishwanathan.
Vishwanathan. Yes, sir. I have also seen. If the interest is taken as turnover in GSTR 9, then what happens to ITC? Do I have to reverse ITC on a proportional basis? Sir, interest income on account of advances or deposits which I earn is an exempted turnover, but it is excluded for the purpose of proportionate ITC reversal of Rule 42 or 43, clearly mentioned in the explanation to Rule 42 and 43. Hence, there is no need to any reversal, sir.
And how merchant trading transaction will be considered generally?
Sir, merchant trading transaction, what you are talking about is me sitting in India, buying goods from somebody and selling goods from somebody, both are outside India. Now that is non-GST Schedule 3 transaction. It will stay outside the purview of GST. So it will be non-GST. Since it is non-GST, it will not attract ITC reversal also.
Does it mean the deemed export should be reported under the 2 line 4B and 4E?
No, it should be reported only in 4E. Deemed exports is having a separate entry. So we should not mix it and report it in 4B. Please remember, 0.1% transaction is not deemed export. That is merchant exporter's sale. What I am selling to a merchant exporter. That will find a part in 4B. But 4E will only contain those which are covered by notification number 48/2017. So only once to be reported, but that in 4E only, not in 4B.
And whether GSTR 9C is editable? 9, sorry, not 9C, 9 is editable.
Yes, 9 is editable, and wherever I have discussed in my discussion also, I have mentioned which tables are editable and which tables are not editable.
Yeah, you said in 9C, but whether the 9 is editable, it's a specific
9
question.
is fully editable. 9 is also editable. Let me put it like this. Table 4, Table 5 of GSTR 9 are fully editable. The table 6A is not editable because 6A gets auto-populated from 3B. We only give the breakup of it. Now the breakup is something which we need to give. Hence, that is fully editable. Table 7, again we need to give the breakup, fully editable. Table 8, 8A and 8B gets auto-populated. 8A from my 2B or 2A, 8B gets auto-populated from my 6B. So indirectly it is editable. If I test 6B, 8B will also get edited. And then the remaining elements of 8 are also editable. 9, I told you only one column is editable. Column number 2 in table 9 of GSTR 9. 10, 11, 12, 13 completely editable in GSTR 9. Of course, table 17 HSN wise is also fully editable.
Schedule 3 item, third country export, it is not a non-GST supply. Where do we reflect?
Third country exports.
I think it is a foreign export.
Sir,
if it is another country. It seems
from
another
India
country
to
export.
country, yeah. If it is from India to a place outside India, it is export, sir. If it is from India to a place outside India, like the one I discussed, maybe you are buying something from Malaysia and giving it to a person in Dubai. That becomes merchant trade transaction. That is non-GST only.
Okay. Record. I think the sessions is recorded, sir. So definitely it will be posted in our YouTube channel, SIRC YouTube channel. Wherever you have times, you can revisit it, sir. It is not a problem. Yes, record is available.
March 2025. Outward liability.
March 20 outward liability. IGST is wrongly auto-populated at a higher figure in GSTR 3B than GSTR 1 of March 2025. How to report in GSTR 9 and obtain refund party not liable to file GSTR 9C. If party is not liable to file GSTR 9C, it means less than 5 crore turnover. Then wrongly auto-populated IGST, where we do report in GSTR 9. That is the question.
Noted, sir. So the tax has been paid in excess. That is the summary of the problem. March 25, tax has been paid in excess. Ideally, it should have been adjusted in the subsequent months. Let us say from April to October returns, which is allowed by section 39, subsection 9. But if that is not done, or there might be reason that you may not have liability in the head of IGST. If that is the scenario, it is better. My suggestion is to file 9, stating that there is an excess payment. Now, how to determine that excess payment? When you report in table 4, report only that turnover on which you are liable to pay. In table 9 of GSTR 9, in that column 2, you populate only the actual liability. Now, it will automatically compare the actual to be paid with what is actually paid, and in table 9, column 9, it will give you the negative number. Now, that is a proof that you have paid the tax in excess. Based on this, please apply for a refund. Within 2 years from the date of erroneous payment, you are entitled to apply for the refund. So, which can happen. 9C will not stop you from, or non-filing of 9C will not stop you from obtaining for that refund.
23-24 sale reported in 24-25, whether to include in table 4 or whether only sales of 24-25 to be shown.
Only 24-25 to be shown. 23-24 should not be included. That is something which I told you during the discussion also. There is no place to report earlier year turnover reported in this year. But there is a place 10 and 11 to report this year turnover reported in next year. So now that we have got one place to report it, to the extent of what we reported in 23-24, as reported in 24-25, remove it from table 4. What it will result is in GSTR 9, table 9, column 2, liability will reduce against what is paid. Paid will be more, not a problem, because last year we would have said this tax has been paid in the subsequent year. Our claim will get substantiated by this reporting.
Actually, when 23-24 9C file itself, we are whatever the left out turnover, we'll show it there itself. No, what is there to report it in 24-25? It is there anything to be there in a reported in 24-25?
No, sir. What will happen if it is B2C means automatically the system will, because B2C, there is no invoice date that is given. So, for example, I am a shop. I am having 8 shops across Tamil Nadu. One shop I did not report in March 24. I reported all my 8 plus 1 shop in the month of April 2024. Now 9 B2C turnovers will be there in my April return. Everything will be forming part of my table 4A. So the question is whether should I leave it there or should I remove it? My answer is to remove it.
Right. ITC pertaining to 23-24 is actually reflected in GST 2B of financial year 23-24. However, the input was accounted only financial year 24-25 and the ITC has been claimed in GST 3B of 24-25. In this case, if the same ITC is reported in table 6A1 of GSTR 9 for the year 24-25, will it result a mismatch in table 12 of GSTR 9C? Table 12 due to the difference between ITC as per the books and ITC claimed in GSTR 9. How should this difference be reconciled or disclosed in GSTR 9C?
Okay, first I will address it by telling you that 6A1, 8C, 12 and 13 of GSTR 9 and 12C or 12B of GSTR 9C are completely different expectations, different data points. The 12 and 13 of this year can become 6A1 of next year. But this year 6A1, this year 12 and 13, this year 12B and 12C or 8C of GSTR 9 do not have any connection between them. Approach each and every item individually. For example, 23-24 invoice that is getting reflected in 24-25. Credit is also availed in 24-25, accounted also in 24-25. 6A1, it will find a place. Because it should not get compared with this year 2B, no, or this year invoices. So for that purpose, it should find a place in 6A1. Then it doesn't come in anywhere else because neither does it have a place to report in 8C or 12 or 13. Leave it. Now come to 9C. In 9C, all we are going to say is accounted in this year and availed in this year. Though it pertains to earlier year, you would have already reported it in 12C of last year. All you are going to do is bring it and report it in 12B of this year. That's all. That is how it needs to be reported.
Okay. In some cases, we increase 4A5 amount for the credit note for which the original ITC has been reversed under 4B1. This causes a difference in table 8. What to do in this case?
Okay, you increase the value to the credit note is negative. To that extent, you increase it because you have reversed it in 4B1. Okay, this needs to be addressed on a case-to-case basis, sir, because ideally, if we reverse first and subsequently only the credit note comes, what we generally do is we reverse it only after the credit note comes, or we wait until the end of the financial year and reverse the credit note. Now, what you have done is you have done the preemptive reversal on the first itself. So subsequently only you are reporting it. Hence, this will result in 4A5 being higher, but this will not affect your annual reporting disclosure. This will only result in a notice with respect to 2B, 3B mismatch. It will not have an impact on your annual returns. You can, because whatever net ITC that you have taken in 3B will not change. You will report that only here. You may please continue to report it. The credit notes, you will still show it as 4B1 reversal only and show it under appropriate head. No need to do a netting off that as it was appearing in your 2B. Leave it as it is. How you have reported in 3B, same way you reported in GSTR 9.
Okay, since schedule 3 item are not included in AA TO, will not be logical to reflect the same in 9C, table 2, serial number 5R and 6A instead of 5F of GSTR 9.
Will not be logical to reflect the same in 9C, table 2, serial number 5R and 6A instead of 5F of GSTR 9. Okay, you are expecting a change in the reporting with respect to where it should be because it doesn't form part of aggregate turnover. So please, the point here is aggregate annual turnover, it doesn't form part of, yet there are people who will file only 9 due to the turnover restrictions. So that is the reason why in both the places it is finding a place. If you are a person with more than 5 crore turnover, then as you say, it can directly be reported in 9C so that it will take care of the turnover reconciliation. But imagine the taxpayers whose turnover is below 5 crores but above 2 crores. For them, this turnover needs to be reported so that the officer will not wonder what is the reason for difference between P&L and GST turnover. Hence, that is the reason why it is finding a place in both.
It is pertaining to financial year 23-24 is actually reflecting in GSTR 2B of 24-25. However, the input was accounted only in 24-25 and ITC has been claimed in the GSTR 3B of 24-25. But this is reflecting in 8A of 23-24. In this case, there is a difference in 8D. What should we do?
I am hoping that this question is not for 23-24, it is for 24-25. In 24-25, ideally, you are not supposed to do anything at all, because this invoice finds a place in 8A of 23-24. And in 24-25, this invoice, anyway, the credit that you have availed in 3B will be shown in 6A1. When it is shown in 6A1, it doesn't have anything to do with 8B. So it will never affect your table 8 of 24-25.
Okay, it is pertaining to 23-24 is actually reflecting in GST 2B of 23-24. However, the input was accounted on the same question. No?
I think it's the same question. Yeah.
If the ITC reported in table 6A 1 of 9 will result in mismatch of table 2. Oh, it is, I think this question is already posted.
Yes.
How to amend the e-invoice after 24 hours in e-invoice portal?
Not possible.
I think, can you explain the table 8C again? I think, so the whether we have a time, sir, or we are going to post it the same thing in our YouTube, sir. YouTube. Kindly once again you go through it. IGST on imports paid 1 lakh as per GST 2B is 1 lakh availed during the year 8,000 in 6E. Should I report 80,000 or 1 lakh, and 8G is from 6E and 8H 80,000?
Okay. Now this 8H will get populated with 1 lakh. In 8H1, you need to report 20,000. 8H 80,000 comes, 20,000 you will report there, so that 1 lakh gets tallied. In 6E, only what is availed during the year needs to be reported, which is only 80,000.
Sir, for a pure exempt supplier, some months erroneously reported as B2C in financial year 24-25. These specific month B2C were corrected as 0 in financial year 25-26. Should we show the negative figure in table 10 and 11, or show only the correct exempted turnover in the table 5D alone? Kindly guide us, sir.
Okay, the B2C reporting is there during the year in 24-25, but that was corrected only in 25-26. Ideally, it should be reported in that manner only. That is, 24-25, you report your mistake in table 4. 10 and 11 tables where subsequent amendments needs to be reported, there you report it properly, which forms the basis for next year to remove that in your table 4. So report the erroneous data. It is like BRS, bank commits a mistake, you also commit it. So what you do in table 4, you please report it the erroneous way in which it has been reported in this year. Subsequent correction, you please report it in table 10 and 11.
Should adjustment be given separate for B2B and B2C separately?
No, it is for the HSN, which is the total for all the goods and services. From that perspective, what is the outward supply accordingly?
HSN summary not tallying with the total supply, any consequence?
You will not be able to file.
GSTR 3B turnover is more than GSTR 9. The liability is discharged as per GSTR 3B. Now the officer wants to charge on the difference. There is no underpayment. Can he demand notice?
From the limited information that you have given, it seems like you have paid more tax. So there is no demand.
3B turnover is more than GSTR 9. The liability is discharged as per the GSTR 3B.
Correct.
So whatever the turnover shown in the 9 is less than 3B. Whatever they reported earlier is the 3B.
So there is no
it means they have paid higher now.
So there is no question of demand.
Demand at all. I think there is a appreciation from Narayanan V. Excellent presentation. I think Ashwin again and again posting the same question, sir. Mahalakshmi, whether the corporate guarantee given by the holding company to subsidiary is a deemed supply under section 7 without consideration, but only GST paid, will it come under the class 5O in turnover reconciliation?
There are two ways to look at it, ma'am. If you are looking at it as a deemed supply, it is better to show in table 5D rather than bringing it to 5O. 5D is meant for such deemed supplies.
Hi, sir. Whether the ITC pertaining to financial 23-24 has been claimed in 24-25 and soft reversed in 24-25 and again reclaimed in 24-25. It has to be reported twice in the table 6A1.
No, in 6A1, when you want to report of ITC pertaining to earlier year in this year, do the netting off. So you will take it only one time. Plus, minus, plus. Don't do it just plus. That's all.
Okay. For rule 37B reversal, how to ensure that GSTR 3B bought 3B filed by supplier?
Okay. Sir, it is very simple. We can go to the GST portal and check the filing table of our supplier, and from there we will get to know. If he is a regular supplier, you see the invoices of the subsequent months also appearing in your GSTR 2B. It is a proof that he has filed 3B. Then only he can open the next month's GSTR 1. So that way you can rest assured that he has filed the subsequent returns. It is Rule 37A.
Is table 14 of GST 9 optional for all taxpayer irrespective of the turnover limit?
Absolutely, sir. That is the only confidence with which I am doing this whole presentation. Had that been mandatory, we would have been running around trying to fill it up.
Hi, sir. Whether table 5Q of GSTR 9C is net of 5N plus 10 minus 11. So people creating equations,
yes,
sir.
Correct. 5N plus 10 minus 11. Yes, you are right.
Can GSTR 9 be revised?
Absolutely not. Legally, it has been told very categorically in section 44, subsection 1, not possible to revise.
I think the e-invoice amendment already by issuing credit note or debit note, whether e-invoice can be amended by issuing credit or debit note. That is what.
You want to nullify the impact of it? Yes, you can. Sir, my easiest way is if e-invoice is wrong, don't report it. That's all. Let it be there in e-invoice portal. Don't allow it to figure in your GSTR 1.
Okay. Where do we report bills issued for the expenses reimbursement in GSTR 9?
Okay, I am assuming this is a reimbursement which is actually a reimbursement contemplated under Rule 33. If that is the case, I would not report it anywhere. If you feel constrained to report it somewhere, maybe you can show it under non-GST. But technically, it is not also non-GST. But do not report it under exempted. It is not exempted at all. It is outside the purview of taxability itself, if it is a pure agency in nature.
I think this is relating to firms, sir. We are only getting maximum this issue.
Absolutely. The tax that we have paid on behalf of the client. For us only, this is mandatory.
The presentation was censored, and by when it will be uploaded, Akshay Kumar, I think technical team will take care of it. Maximum day or two, they will upload it, sir. It is, sir, Mr. Ratnavel, I am giving a confirmation. It will be uploaded. Kindly do it without fail.
Sure, sir.
What will be the reason GSTR 8A is less than ITC as per 6B?
8A will not be less, sir. 6B is more because we would have availed more than what appears in my 2B. That is the only scenario. And the other scenario, the other gentleman had posted earlier, where 2B, net of credit note comes. But we don't do the net off. We manually increase it. It will result in a negative. Or the 6B, which ultimately turns out to be 8B, being more than 8A. Those are the possible reasons.
Questions get increased, sir.
We'll have to stop it at some point because I can also see 38%.
So we'll another 8 minutes there. Until 8 minutes, whatever there we will read out, sir.
Thanks, sir.
Okay. Sir, if by oversight, if any assessee has failed to reclaim ITC, then what can be done?
If the time limit as we stand today, the 30th November, before that return is to be filed, in which ITC needs to be claimed. If it is not claimed, that's it. The ITC shall lapse.
Okay. For a LUT exporter, ITC is there. Do we invoice in future with GST and claim adjustment with respect to ITC and also claim that as a refund?
Okay, I'm assuming what you are doing is export. If you are doing
export, LUT is there, and also I think if you do both only, they will have the ITC, no?
If you see, for example, you have accumulated ITC, in future, you can do either one of it. Either you can do exports with payment or continue like this, you will accumulate ITC. That ITC can be utilized for your local supplies, wherever GST liability arises.
In 9C, can excess output tax paid taken as a reversal of ITC where it difference exists, sir?
In 9C, can excess output tax paid be taken as reversal of ITC? Okay. Where ITC difference exists. This is a numerical expectation, sir. In 9C, there is no such place to report it. Because if I have paid a tax liability in excess, the provisions of GST itself operates in a different manner. It only asks the question, have I collected and paid the tax? If I have collected and paid the tax, the doctrine of unjust enrichment will come into picture. So I cannot say, please treat it as reversal of ITC, which I am liable on the other hand. That needs to be handled separately. This needs to be handled separately.
ITC pertaining to 24-25, but not availed till October 24. We have manually added the opening reclaimed ledger as mandated and again reclaimed once eligible in 24-25, 25-26. How to report this case?
Pertaining to 24-25, but not claimed till October 24. Okay.
Yes.
We have manually added. Okay. You have taken the reclaimed ledger. That is okay, sir.
Yes.
See, as long as you have taken the ITC subsequently, see, generally, if you had followed Circular 170, 6B once would have come. The reversal would have come in 4B2. 4A5 equivalent is 6B. 4B2 equivalent is 7H. You reclaim again in 4A5, you report it in 6H. This is what I told you. In your case, you have done it only once. So directly report it in 6B, over.
Why RCM payable amount should not be reported in table 4G? Where should the further RCM payable reported?
Sir, by reporting the further RCM payable, we are only complicating the reporting and telling that next year this is payable and how this is paid. If you are confident that it will be paid through DRC 03 in the annual return, my suggestion is to go ahead and report it in 4G itself. But if that is something which has been paid subsequently, for example, March month, GST bill would have come. I have got 60 days to make the GST payment. Maybe I would have taken it and accounted in the month of May, and RCM would have been paid in the month of May. Rather than reporting it as payable, we can continue with the only what is paid being reported in 4G. So that is more convenient. Hence, I am following that.
How to report foreign branch sales in annual part of financial turnover and no GST sale? Should we consider this as a 9C reconciliation item?
Either as a 9C reconciliation item, or my suggestion is bring it as part of 9 itself, non-GST.
Is it waiver available where additional liability is first reported in the GSTR 9 and ITC is used?
Interest waiver available where additional liability? Sorry, sir. Sorry, I missed the question. Can you tell?
Sorry. Is it waiver available where additional liability is first reported in GSTR 9 and ITC is used?
Okay, is interest waiver available where additional liability is first reported?
Oh, interest.
Yeah, where additional liability is first reported in GSTR 9 and ITC is used. Okay, what you are saying is liability is first reported means I'm not able to understand here, sir. Liability is reported and IT is used for paying the liability. You are saying is interest waiver available? Interest waiver is irrespective of how the tax has been paid. Section 128A interest waiver only says that if it is a self-assessed. In fact, section doesn't say that. The rule 164 says that if it is a self-assessed liability, then there is a question of no interest waiver. But if it is not a self-assessed liability, meaning it is coming as part of GSTR 9, we can say that the interest waiver should be given.
Everything is appreciation of your presentation, sir. Table 9 liability working out once again. Please explain. You mean to say from the liability for the previous year tax paid to be deducted? எனக்கு புரியல சார். உங்களுக்கு புரியுதா?
அதேதான் இங்கேயும் எனக்கும் புரியல. Maybe send the question.
Sir, please be clear on your things, sir. I think Shankar sir's number is there. Oh, kindly personally talk to him, get it clarified, sir. Sir, we have unutilized cash ledger balance for long period in GST. Is it possible to get refund? Cash balance? Yes. 100% yes, you can. There is a circular also to this effect, you can. Table 6A1 is net amount and reclaimable table H of previous year record to be reported. Is net amount and reclaimable in table H of previous year? So this also I'm not able to understand. Table 6A1 is net amount and reclaimable in table H. Hello. Is it 6H or 7H? I don't understand. Very sorry. Even aggregate annual turnover, they put it in AATO. So I
AATO.
thought where maybe some things are there. Financial year 23-24 turnover exceed 5 crore, but e-invoicing missed in financial year 24-25 be complied, but all output taxes paid. What is the consequence?
Sir, e-invoice is only a procedural compliance. Now please raise it and regularize yourself.
If reverse one is 6A1, then the other true transaction to be reported in table 6H and table 7H. Is it correct, sir?
You mean to say availed and reversed? Availed and reversed means, sir, this year ITC, that is 24-25 related ITC, 6B and 7H. Earlier, 23-24 related ITC, availed and reversed means net 6A1.
Breakup of input service in GSTR 9 table 6 should be given breakup as per books or 3B.
Sir, I missed you.
Sir, in 9 table 6, whether we should give the breakup as per the books or 3B.
The 3B ITC will only get auto-populated, the total. So we are only giving a breakup of that total. The data needs to be derived for that from your books of accounts, but you cannot exceed what has already been availed in 3B.
I think is full ITC itself was not reclaimed in ITR 9 in earlier year. What can be done?
Not reclaimed.
No, not reclaimed.
You can try legal methods, sir, but in a procedural discussion, I would only say that it is lapsed.
When I download a ITC, as per GSTR 8A is less than the amount shown in the portal. Why?
Now, this we do not know why, but is it a problem that others also have? Yes, we have also experienced this problem. You may choose and raise a ticket. Some of the cases we have got it resolved with a ticket also.
The GST officer says the 10% of liability must be paid by cash. However, if there are enough credit balance, the portal does not allow adjustment of cash. Insist ITC to be used first.
Okay, irrespective of the portal insisting any kind of pre-deposit on a demand, I can go with payment utilizing ITC. There is no bar. There is a clear-cut circular. There is a judgment by Bombay High Court also on this matter. So you can directly pay using your ITC pre-deposits.
I asked about the difference in table 8 because of credit note. Because we reversed the blocked ITC in 4B1, when they issue a credit note later, can we manually add the credit note in 4A5?
Yes, you can, but this will result in a difference. You need to be having a reconciliation to support this difference.
Is interest payable on additional tax liability reported first GSTR 9? Sir, I think it is a earlier question.
This question, sir, Sundrabahu, sir. I remember, I recollect you also very well. So this point 50 subsection 1 says, any return filed for the period. So you are paying it in annual return by using ITC, interest will still be applicable because you should have disclosed it and paid it in that month return or that period's return. It is being filed in the annual return. As I told multiple times during my discussion, annual return is not a return under section 39. So 50 subsection 1 proviso, which saves interest on taxes that are paid using ITC, doesn't protect you if it is disclosed in annual return.
23-24 turnover exceeds 5 crore, but e-invoicing missed in 24-25 to be complied, but all output taxes paid. What is the consequence?
You already asked this question. Please raise e-invoices today for the backdated period and regularize yourself, because the consequence, if you really want to look at it, it will be very detrimental. Department will say all the ITC will be disallowed, the transaction will be considered as ineligible or not a valid transaction. So to overcome that, try to see whether you can regularize it now. That will be my answer.
Okay, I think we completed, even though 2 minutes extra, we have completed all the questions, sir. So thank you, sir, first of all, for your wonderful presentation. So as usual, so as I said in my introduction, so Shankara Narayanan sir is a very known person and having the depth knowledge in GST thing. So even almost at the time of in between, it reached almost 680, 690 people are attended. So still after even the question answer session, we have almost 430 people to waiting for your answers, sir. It shows how the people are interested in GST and your presentation, sir. So thank you all.
Credit should go to GST or credit should go to GST.
Yes, sir. So normally in December, GST is a buzzword. Even whenever we organize a program, even the AI program. So how to automate
Do
GST
reconciliation
through
in
AI?
GST.
Only without GST, even the any sessions, even insolvency session also. So GST issues, we have a separate session for. Then only the people shows interest on these kind of subjects. So that much of impact GST is have in our day-to-day life, in our profession, and everywhere. So thank you all for participation and your support. Thank you.
Thank you. Good day.